Good morning. This is Japanese Economic Review Channel. Today, we analyze a historic milestone. On May 13, 2026, the Nikkei 225 surged to an all-time high of 63,272.11, marking its first-ever finish above the 63,000 level. Despite a higher-than-expected US CPI of 2.8%, Japanese stocks demonstrated remarkable resilience. This decoupling suggests that Japanese corporate earnings are now powerful enough to overpower global inflationary headwinds. The global catalyst was the US April core CPI, coming in at 2.8% against a 2.7% consensus. This sticky inflation triggered an immediate repricing. Hopes for early FRB rate cuts receded rapidly, putting significant selling pressure on rate-sensitive assets. This created a seesaw effect, where persistent inflation dampened monetary easing expectations across global trading desks. The U.S. market reacted with a clear sector rotation. The tech-heavy Nasdaq fell over 185 points, dragged down by semiconductor giants like Qualcomm and Intel. Conversely, the NY Dow managed its third consecutive day of gains. This capital flight matrix shows investors rotating out of vulnerable tech stocks and into defensive sectors to support the index amidst rate fears. Japan's market story was one of a dramatic V-shaped recovery. After a morning dip caused by the U.S. tech hangover, strong dip buying emerged at midday. Investors pivoted from macro fears to fundamental strengths, specifically forward corporate earnings expectations. This momentum drove the Nikkei to peak at 63,347 during the afternoon session, nearing its intraday record. Market breadth was impressive, with 26 out of 33 sectors advancing. We saw significant risk-on capital deployed into autos like Toyota and Honda, wholesale leaders like Mitsui and Mitsubishi, and the financial sector. This active rotation into strong earnings generators effectively absorbed the weakness seen in tech-adjacent metal products and construction. The Growth 250 index also showed strength, rebounding after previous day profit-taking. Capital flowed into high-conviction themes: AI with ExoWizards, space tech with Synspective, and fintech with Finatext Holdings. This indicates a robust risk appetite across all market caps, though we saw spot weakness in specific biotech and drone stocks. Real-world innovation is the engine of this rally. Key drivers include Yaskawa's new collaborative robots, Shimadzu's AI medical imaging, and LIFULL's AI-generated VR property tools. Furthermore, ESG initiatives like Nikkei's uniform recycling and Yokohama Rubber's new R&D center in China highlight a strategic expansion of the global footprint and sustainable foundations. In summary, we have entered a decoupling phase. While the U.S. market remains policy-constrained by inflation and delayed easing, the Japanese market has become fundamentally driven. The historic 63,000 finish is a triumph of local alpha. It proves that robust Japanese corporate fundamentals and aggressive capex are now capable of navigating external macro rate turbulence. Thank you for watching the Japanese Economic Review. We look forward to having you with us again.